Hello everyone, my name is Vedant and welcome to Markets Daily, a daily stock market insights and analysis podcast by Bajaj Broking. Our mission to bring our listeners, that's you, the daily financial news and advice that you will need before the markets open so that you can make the best decisions when it comes to improving your finances. Along with this program, if you require any more information, please do visit www.bajajbroking.in. With that said, let's get into today's episode. Starting with the top 5 news headlines for the day, NTPC Green has picked 4 investment banks for a proposed 10,000 crore IPO. Along similar lines, Vodafone Idea is planning to launch an up to 18,000 crore FPO on April 18th. Oil prices stay near 6-month highs based on the tensions in the Middle East, which we will cover in a little more detail in the other asset classes. The Indian government has ended tax relief for foreign portfolio investments from Mauritius after the revision of the treaty between the two nations. And lastly, Maharashtra Seamless gets a work order worth approximately 674 crore rupees from ONGC for supply of casing seamless pipes. For any news headlines that we might not have covered in today's episode, please be sure to check out the description box of this episode. And the last little bit of financial news, the FII and DII sales data for the day. The FII's net buy stands at 2,778.17 crore rupees and DII's net buy stands at 163.36 crore rupees in equities yesterday. Moving on to the global market insights, Treasury yields surged while equity indexes sank on Wednesday after the data showed US consumer prices rose more than expected in March, diminishing hopes for how much and how soon the Federal Reserve can cut the interest rates. A global equities index, however, rose slightly on Thursday as data showed US producer prices rose more slowly than expected last month, with a cost of services increase blunted by falling goods prices. The producer price index for final demand rose 0.2% versus the economist expectations for 0.3% and a February increase of 0.6%. On Thursday yesterday, traders were betting on a roughly 76% chance that the Fed will keep rates unchanged in June versus the 83.5% bet on Wednesday and an almost 51% chance they will stay the same in July compared with the 57.6% bet on Wednesday. This is all according to CME Group's Fed Watch tool. As far as the numbers go on Wall Street, the Dow Jones Industrial Average fell 2.43 points or 0.01% to close at 38,459.08 points. The S&P 500 gained 38.42 points or 0.74% to close at 5,199.06 points, and the Nasdaq Composite gained 271.84 points or 1.68% to close at 16,442.20 points. The up move in IT stocks on Thursday's session was mainly led by Apple, as the iPhone maker jumped 4.3% after Bloomberg News reported the company's plans to overhaul its Mac products with new artificial intelligence-focused chips. AI benchmark Nvidia also popped 4.1% and Amazon leapt to an all-time high before closing with an uptick of 1.7%. Stock futures flickered near the flat line as traders looked ahead to the release of corporate earnings from major US banks. These include names like JP Morgan Chase, Wells Fargo, Citigroup, BlackRock, and State Street. And moving away from the west to the east, Asia-Pacific markets were mixed on Friday after an inflation-fueled sell-off in the previous session, with investors assessing economic data from Singapore and South Korea while awaiting the trade numbers from China. South Korea's Kospi index was down 0.38%, but the small-cap Kosdaq gained 0.62%. Japan's Nikkei 225 climbed 0.51%, while the broad-based topics rose 0.53%. With that, we have exhausted all the insights from what's happening outside India, so let's move into the sections about the Indian markets and indices. The GIFT Nifty, after adjusting the last 2 days' price action, is expected to open on a negative note amid weakness in the global market. The Nifty spot, post a negative opening, is likely to consolidate with a corrective bias in the broad range of 22,550 to 22,750 levels amid stock-specific action. For the Nifty short-term outlook, benchmark indices traded with positive bias and closed the weekly expiry session on Wednesday on a strong note. The Nifty started the session on a firm note and thereafter consolidated in a range with positive bias and formed a fresh all-time high of 22,775 levels in the late trade. The index, though, closed the session near the high at 22,753 levels, still though an uptick by 0.5%. The Bank Nifty also traded with positive bias and closed the session at 48,986 levels, up by 0.5% as well. On the daily chart, we can see that the index has formed a high wave candle with a higher high and higher low, signaling consolidation amid positive bias around the upper band of the rising channel, containing the entire up move of the calendar year of 2024. The Nifty this week has tested our immediate target and the upper band of the rising channel placed around the 22,800 to 22,900 level range and is seen consolidating around the same in the last two sessions. We believe going forward, the index is likely to enter a consolidation phase in the broad range of 22,900 to 22,400 levels amid stock-specific action ahead of the quarterly numbers after the recent strong up move. The short-term support for the Nifty is placed around the 22,100 to 22,300 level range, being a confluence of the last week low and the rising 50 days EMA, currently placed at 22,061 levels, and the 50% retracement of the current up move. Moving on to the intraday levels for the day. For the Nifty, intraday resistance is situated at 22,690 levels, followed by 22,760 levels. Conversely, downside support is located at 22,590 levels, followed by 22,510 levels. For the Bank Nifty, intraday resistance is positioned at 48,850 levels, followed by 49,000 levels, while downside support is found at 48,570 levels, followed by 48,400 levels. And lastly, for the Fin Nifty, intraday resistance is positioned at 21,660 levels, followed by 21,730 levels, while downside support is found at 21,550 levels, followed by 21,460 levels. Moving on to our last section about the Indian indices and markets, the derivative data analysis. For Nifty, the highest addition in call open interest has been observed at the 23,200 level, followed by the 23,000 level, which will act as resistance for the Nifty. On the other hand, the highest addition in put open interest has been placed at the 21,800 level, which is an interesting point to observe, while the immediate put open interest addition has been noted at the 22,700 and 22,500 level range. According to the option chain, Nifty is likely to trade within the range of 22,500 and 23,000 levels. The 22,500 level will act as crucial support, and breaching and holding below it may witness a corrective bias. The Nifty's put-call ratio has increased by 0.23 and is now at 1.32. For the Bank Nifty, the accumulation of both call and put open interest addition at the single strike of the 49,000 level suggests a straddle formation and is likely to act as a deciding level for the day. The highest addition in call open interest has been observed at the 49,000 level, which will act as a resistance level for the Bank Nifty. If the price surpasses and sustains above it, it may trigger short covering. However, the highest addition in put open interest has been observed at the 49,000 level, suggesting that if the price holds below 49,000, a corrective bias could occur, dragging it towards 48,500 levels, followed by the 48,000 level, where the put open interest addition could be observed. According to option chain analysis, the Bank Nifty is likely to trade within the range of 48,000 and 49,000 levels. With that, we have exhausted all the news about the equities market in general, so let's move into the other asset classes. Yields on US Treasuries pushed higher, with 2-year yields breaching 5% for the first time since November before edging down as investors worried over rebounding inflation after Wednesday's data, despite the softer than expected producer prices. The yield on benchmark US 10-year notes rose 2.2 basis points to 4.582% from 4.56% late on Wednesday. In currencies, trading was choppy with the dollar last up slightly as weaker than expected March US producer prices did not relieve concerns about persistent inflation, which has fueled fears that the Fed will take its time cutting rates this year. The dollar index gained 0.07% to close at 105.27 basis points. Oil prices settled lower as sticky inflation dampened hopes for near-term US interest rate cuts, but worries that Iran might attack Israeli interests kept crude near 6-month highs, as we mentioned earlier. US crude settled down 1.38% at $85.02 a barrel, and Brent ended at $89.74 per barrel, down 0.82% on the day. Gold prices firmed after the inflation data, while persistent geopolitical concerns added to the metal's shine. Spot gold added 1.84% to close at $2,375.67 an ounce in valuation, while US gold futures gained 1.86% to close at $2,372.90 an ounce in valuation. And with that, we have reached the end of today's episode. We need to start getting ready for the markets opening later today, as I'm sure you do too. As always, I hope you all have gotten something meaningful out of today's program. And as mentioned before, for more information, please do visit www.bajajbroking.in. And for any news headlines that we might have missed, please be sure to check the description box of this episode. This podcast was made possible by the good people at Bajaj Broking, and we can't wait to bring more financial news and analysis to you when we return next week. Cheers, everyone.
Investments in the securities market are subject to market risk. Read all related documents carefully before investing.